Inside all financial markets, we can view them as either chaotic or scientific. If we view financial markets as chaotic, we'll gamble. After all, there's no pattern. Just pick something and hope it goes in the right direction. Or we can apply a scientific mindset. We can look for interdependencies and cross-correlations. We can extract market rules. And we can create a hackable system. The purpose of the CTKS method is to hack financial markets with a scientific approach. Extracting rules out of financial markets is vitally important. If you find yourself running out of dry powder, not being able to take advantage of price fluctuations, then considering Rule 353 is a good thing to do. Patience activates the 10-5-10 rule. We have an absolutely fantastic global family, and in yesterday's video, Cheryl asked the question, what do I do if I run out of dry powder? Can you do an episode of putting some cash aside? Absolutely, my friend. And if you have different questions or queries that you would like answered in the daily video, please reach out in the comments. One of the first things to understand, Rule 7 is incredibly powerful. Buying creates profits. I remember when I got into financial markets nearly 40 years ago, I was told to buy low and to sell high. I was also told never have a loss. What's more, I did a finance degree on top of that. What I've learned from my decades inside financial markets, a lot of people have everything backwards. And I think that's because the institutions want us to have it backwards. That's how they make their money. Instead of being at the mercy of the institutions, I want you to become an institution of one. I want to share my mindset that's taken millions and millions of dollars to create. This is one of those rules. Buying creates profits. Don't forget to smash that like button, and if you're new, a very warm welcome, and make sure you subscribe to get rules like this. They'll make and save you a fortune. The CTKS system is all about buying on red. That's what these little green arrows are. They're buys. What are the little red arrows? They're sells. What are these sells about? Well, it's about locking in a required rate of return, focusing on the annualized ROI. Understanding the annualized return on investment is critically important. In fact, you cannot become consistently profitable without it. If you would like for me to put videos together for you on annualized return on investment, please let me know in the comments. One thing I mentioned, buying creates profits. You can see it at a time like this. When we buy when the price retraces, so long as the price goes up, we're sitting pretty. I do not do any leverage trading. This is all purchasing with the expectation of increasing prices at spot. Very simply, spot means ownership, derivatives means borrowing. If you borrow, you're going to have to pay costs. You will always pay fees, no matter if you're going at spot or under leverage. But the concept is, please make sure that you're an expert at spot before you get into leverage, or you're just going to blow up your account. That is, you'll lose everything. Returning to the idea of a 10-5-10 fund, when I look at Solana, I already know the objective dynamic market structure, or the CTKS structure of what I'm looking at. I understand the timing of the market because I've used the timing cheat sheet to figure out what's going on. I'm not wildly guessing when I place these buy or sell orders. I'm using a scientific system. Let's go back to this particular buy activity around the 15th of December. You notice that the price just skydived down and then slurped up some buy orders and just went nuts to the upside. Welcome to crypto. Crypto undergoes what's called the ICE process. It's an exponential implosion, consolidation, explosion. The ICE process helps us to get out of bad trades and into good profits. But the question is, was this a bad trade? Not at all, because I understood where the market was going. I did my timing cheat sheet. I understood the interdependencies and intercorrelations. I wasn't just looking at Solana's chart. I was looking at total crypto market cap, Bitcoin, all of the other marked up charts inside the service. including the yields and the Forex pairs, as well as the stock market. Let's just go on a little bit further. We can see all of this buying on red, selling on green, and we can also see some more buying on red. One thing to always bear in mind, when price is coming down, especially coming down chaotically like this, a lot of people would be selling. They would not be buying. And don't forget, I buy at spot. I own each one of these positions, and I just use a specific standard style. Look at this. It's still coming down. A lot of people would be now highly freaked out, just expecting that the price of Solana will crater to zero. And what do we see? Oh, they've all sold. These are massive annualized return on investments. That's what grows you out of losses into consistent profitability. Trading and investing is not an academic exercise. You have to get into the markets. And you have to battle your emotional state. If you look at this, when price was coming down, it was coming down pretty hard. What happened here? I kept on buying. Why did I keep on buying? I understood the structure of the markets. I wasn't gambling and I wasn't guessing. One thing that you will learn, you are safest in capitulations. When things are going really negative, that is the ideal time to get into the market. Crypto is incredibly forgiving. You can get into the market and out of the market within 24 hours. Very commonly. But please make sure that you don't place stress on yourself. Sometimes you can't get in and out of the market in 24 hours. The market just does what the market does. We need to read it like really good trackers. Unfortunately, it's a very fear-filled thing to buy on red when you see it coming down and down and down and down. Notice I'm splitting my levels as well. This is a standard position size. One thing that I do, I wouldn't ever touch a trade or investment without an understanding of the CTKS structure. Here I have the Solana indicator, and I make sure that I understand what the structural buy and sell levels are. When we look at the CTKS method price path for Solana, we can see that we're following that normalized positive distribution, and a little bit more information is required. This red shaded area was a high impact economic news zone. We knew that when the high impact economic news comes out, things can just fluctuate all over the place. But I knew Solana had solid structure beneath it. And what did I do? I was buying into this solid structure. You don't have to just buy at an SL, which is this particular dotted line. And you can see they have different widths. Some are stronger than others. The SLs are called Stanfield levels, and you get them through level 1 and level 2 standard certification on the CTKS method. But what I managed to do is to sell on the way up. Buying on red, selling on green does take a lot of time to get down pat, because you have to fight your fear. One thing to remember, your fear is inversely proportional to your profit. If you have very high fear, you'll go all in at one level. And if the price moves against you, you'll start to say, how do I get out of this thing? This is what people are taught to do. But taught by who? Certainly not us. Just to give you an understanding, from the high on Solana and down to the low of that spike, we lost about nearly 16% of the value. A lot of people think that if price simply recovered, it would go down 15.72% and go up 15.72%. This is incorrect. You can see already that it would come down absolutely 15.72, but it would go up 18.66%. This is always why, if you're buying on the way down, you get on the right side of the percentage, and that's what you need to do. For example, if the 10-5-10 fund comes from this concept, if the price was $10 and it went down to $5, you just lost $5, or 5 on 10 is 50%. But if it came back from $5 to $10, you would make 100%. Just think about that for a minute. This is really important to consider. If something is $10, it falls to $5. That's a 50% drop. But if it goes from $5 back to $10, it's a 100% gain. When you understand the 10-5-10 concept, it's an idea and an ideology. You know that the most profitable way to profit consistently inside the market is to simply buy on red or BOR and sell on green, which is SOG. In other words, BORSOG. BORSOG comes from rule 621, which is buy on red, sell on green. This is a really tough rule to apply, but as soon as you apply it, your life will change forever. Instead of getting on the wrong side of the percentage, you're on the right side of the percentage. The 10-5-10 rule is an extension of BORSOG. Let's have a look at another couple of trades on Bitcoin, not just Solana, but this will work across every single crypto, but you must know what you're doing. It's not a random act. Please don't gamble. Make sure that you have science behind what your approach is to financial markets. Here we can see Bitcoin. I was accumulating Bitcoin at structural levels as it came down, and then I was selling at a required rate of annualized return. If we zoom in, we can see a number of little red arrows here. They're the sells. There's a very important word in Rule 353. That's the word patience. Patience activates the 10-5-10 rule. What does this mean? Patience means that you've already set a limit order inside the market. You're waiting for it to patiently activate or get filled. This means that we never go all in and more at one point. We're patiently activating the 10-5-10 rule at all times. Remember, crypto is exponential, and many stocks are as well. Part of my process is that I make sure I understand the timing of the market by filling in the cheat sheet. Also, I need to drill into the structure of especially Bitcoin and total crypto market cap. When we look at Bitcoin structure, we see so much structural support underneath. The probability of coming in and getting a bounce is extremely high. We've seen this previously when Bitcoin was coming down, and it came down massively. Look, all the way from 40,000. It was nearly 44. Well, it was above 44 at one stage, and it came down to literally $40,000. That was the ideal time to buy, but the only way that you would know that is to understand the CTKS structure, which accounts for all of price history, which in Bitcoin's price action is greater than 5,100 days. We don't use recent indicative price because that just creates story-based analysis. We're aware of the news, but we are more aware of structure. A lot of positive news tends to occur when prices are retracing. For example, as Bitcoin's price was marching up to these levels, I already had my 10-5-10 levels already way down on Bitcoin at structure. I never run out of money because I know and understand that the price action inside crypto is exponential. A lot of people get really greedy. They think they have to go all in and more at one specific level. After all, they need to get their money to work for them. You don't get your money to work for you by doing that. You get your money to work for the institutions by doing that. Instead, becoming an institution of one, you start to spread out your buy levels at structure. And if you spread them out at structure, you cannot run out of money. You will always have dry powder, and if the price momentum changes to one direction or another, you can always reallocate your levels that you have down, or alternately that you have up in terms of sells. January 8 to 10th is the expected window for ETF approval on Bitcoin. The EDX exchange has Litecoin, Bitcoin Cash, Ethereum, and Bitcoin on it, and it's an SEC-approved exchange that nobody's ever heard of. The institutional side is lining up these four for explosive growth. Being an institution of one, you have to think like the institutions. When you understand Rule 353, it's incredibly powerful. Combining it with structural levels, and Rule 7 is even more powerful. Don't forget to do your cheat sheet so you understand which way the market is probabilistically heading. One thing to keep in mind, if your fear is guiding your purchasing decisions, you will make consistent losses. This is really unfortunate, but it's just the market. It's what the market does to people. When the price goes down, it just absolutely freaks everybody out until you become knowledgeable. From that point, when you understand that buying on red puts you on the right side of the percentage because you have the rules, the systems, the experience, you understand the timing and the structure of what you're looking at, then you will move into profitability, consistent profitability. I believe the two most important steps to get to consistent profitability are to understand the structure and the timing. You can get the free CTKS timing cheat sheet from ctksmethod.org. It will look a little overwhelming at the start, but you'll get used to it. Always keep Rule 241 in mind. Timing done right is early. You don't want to be late to the party, because when the party stops inside crypto, it literally blows a hole in the ground. Through the cheat sheet, you'll understand how markets actually work. And the key is marrying the timing with structure. Timing will give you an insight into what to track and what to avoid. It also tells you how the markets could be changing. For those looking at the cheat sheet today, you may be very surprised on what gold is doing. We're not surprised at all because gold, which is a tier 1 chart, is coming into heavy CTKS structural support. That means even though yields are increasing, DXY, dollar strength is increasing, gold is bouncing. This is to be anticipated. You'll find that structure determines price momentum and price movements. We're literally seeing the exact same thing inside crypto right now. And if you would like the TradingView indicators that I use on the daily channel across these 27 charts, the Tier 1, Tier 2, and Tier 3, you can also find them at ctksmethod.org. If you have a question that you would like to ask me, please let me know in the comments and I'd be very happy to help out. If you like this kind of content, please like this video and subscribe and become a member of our global family. We have one of the best communities on YouTube. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.